Let's talk about this is a confusing part for a lot of business owners. I've got sales in multiple states. I just have operations in one state. I might have employees in other states. I'm selling across the country. How does that work? The state revenue allocation. This seems to be very confusing.
We have the more complex topics on the business side, but
Well,
again,
you're an
I
expert.
kind of throw out these stats of our client base. You know, I want to say probably 50% of our clients have multi-state compliance requirements, meaning they have and to trigger a multi-state filing requirement, low-hanging fruit is I have an employee in another state. Say we're headquartered in Georgia, an employee moves, or we hire somebody to California, Arkansas, North Carolina, wherever. That's going to trigger slam dunk. We need to file in that state now. The next kind of low-hanging fruit is if I have property in that state, or I'm renting office space in that other state, that's going to trigger nexus. The assets in a different state, inventory,
Yep.
that triggers it. We do a lot of e-commerce, right? So it's a hot topic there is where's my inventory. And then the third is revenues. So I have revenues in that other state. That's the most complex one, right? Because you can have $100,000 business and have revenues in 30 different states.
Right.
And
Yeah.
and so it's kind of by default, you would say, I can't afford that, which you shouldn't. And so each state, and you have to take it on a state by state basis, has its own laws of what triggers a filing in that state from a revenue standpoint. And it's completely different from
Wow.
each state. Yeah.
Nice. So they just make it
Yeah.
complex.
If you need guidance, we're just a call away.